5 a.m. in New York City. Good morning. I'm Bonnie Gwynn with your Bloomberg Brief. Here's what you need to know. Trade maze. Trump equivocates on a China meeting, while India's Mint newspaper says the US and India are close to a trade deal. More compute. Anthropic and Google are said to be in discussions to team up on a cloud deal. And markets stay put. Futures flat after a metal sell-off and a mixed bag of earnings. More to come today, including the first of the Mag 7, Tesla. So let's take a look at the futures picture. As you can see, looking for direction perhaps, we were flat on the S&P 500 at the end of the session yesterday, down very fractionally on the Nasdaq 100. Look, markets are waiting for a lot of things for clarity. We get CPI data Friday, lots more earnings this week and next week, and the possibility or no of a Trump-Xi meeting. Markets want clarity perhaps before they decide which direction they're headed in next. Let's take a look at bonds, because we're also not seeing too much movement there, but we are staying firmly beneath that 4% mark, just below the 345 mark here, and then the long end continues to come down. We're down another basis point today. I want to show you gold because we had a 5% drop yesterday. I mean, in the overall scheme of the run-up, that 5% drop maybe not huge, but we are flirting with the $4,000 mark again, another 1% of a drop today. Paul Donovan of UBS saying, look, there's plenty to keep gold supported, even with this sell-off, including central bank buying, weaker rates and weaker dollar expectations as well. Let's get across now to London and some individual movers with Valerie Teitel. Valerie.
Good morning, Bonnie. Let's start with a check on how Google is reacting to that headline that they are close to signing a computing power deal, with Anthropic. Alphabet shares up 1.25%. Now, this deal we've reported that could be valued in the high tens of billions of dollars, where Google would be supplying cloud computing processing and its own processors to Anthropic. Anthropic owns the Claude family of large language models that compete with OpenAI's ChatGPT. But Bonnie, there is some circular financing concerns again in this kind of a deal, as Alphabet is a main investor, or had been a main investor in Anthropic in the past. Moving on to earnings, let's talk about Netflix. These are disappointing for a reason that maybe investors didn't see coming. A $600 million charge to pay the Brazilian regulators, authorities there, to settle a tax case, and that dented operating income from Netflix down in pre-market nearly 7%. This did kind of overshadow a solid earnings report. They did have a decent success with one of their most streamed movies of all time, K-pop Demon Hunters. The executives also released a statement to shareholders claiming that AI-generated videos won't necessarily impact their business models, claiming that it's more the videos made by the likes of TikTok or Instagram that could be affected more than the streamer like Netflix. Lastly, I want to check on Barclays, a big European bank that has a decent footprint in the U.S. Out with earnings today. The shares are up 4.25% on the back of a buyback announcement. They also raised their earnings guidance. But under the hood, there were some signs of a weak release here, Vonnie. Their equity trading, for instance, came in flat quarter on quarter, and that's despite some pretty decent gains over from Wall Street. They also set aside more money for those motor finance provisions as well. Vonnie?
All right, Valerie, thank you so much. Valerie Teitel there in London. And later this hour, our latest CFO interview with Manulife's Colin Simpson. And a closer look at Netflix's results and other Mag 7 earnings to come with Paul Meeks of Freedom Capital Markets. In the UK, inflation unexpectedly held steady at 3.8% in September, driven by a drop in food prices. Well, while data show inflation is still almost double the BOE's 2% target, these figures are easing concerns over price pressures. Traders also adding to bets on rate cuts. Joining us now is Bloomberg's Lizzie Burden. So, Lizzie, gives us some of the details. I mean, 3.8% is still a lot of inflation to deal with.
It is, and it's nearly twice the Bank of England's target, notably, but it isn't the rise that economists were expecting, and that's why we've had the market reaction that we have, Vonnie. The reason for the pullback, you mentioned food prices. They've fallen for the first time since May last year, and that's true of the headline level month on month as well. So good news for the Chancellor heading into the budget. Particularly for the Bank of England, of course, we look at the core and services levels, and they've fallen more than expected too. So this is why we've had the repricing of traders' biggest bets on BOE cuts. They've got a cut before the end of 2025, very much back on the table now, a 70% chance of one in December. We've seen gilts falling at a 14-month low, in fact, the gilt yield, the pound dropping too, and that benefiting the FTSE 100. But I will just pepper in a little bit of scepticism here. Our economists at Bloomberg Economics say that they don't see a rate cut from the Bank of England before the end of the year, Vonnie, and that's because you've got inflation expectations rising. They say that they'd rather see, or they think the Bank of England would rather see inflation closer to the 2% target, much closer, before they start easing policy again. So perhaps this isn't the turning point that we are hoping it is just yet.
All right, Lizzie, thank you so much. Lizzie Burden there in London. Now to our top story. New Delhi and the US may be nearing a trade deal that could cut tariffs on Indian exports from around 50% to as low as 15%. This is according to India-based Mint newspaper. Bloomberg's Brendan Murray joins us now for more. Brendan, where did this come out of? It seems like we were not on a great footing with India and those tariffs were going to stay on.
Yeah, exactly. We've heard that the U.S.-India trade deal is close to being agreed upon for a couple of months now, and you've got factions on each side of the trade negotiating teams pushing some ideas that India was about ready to concede on the Russian oil request of the U.S., but we really don't know what's going to happen until President Trump either posts it on his social media or the White House announces it. These deals have been very close to being signed before, and we've seen that they can escalate and re-escalate into a wide disagreement. So while it's a good sign that the two sides are still talking, and apparently some of the folks involved think that they're close to an agreement, I think we'll have to wait and see officially what the White House says about this and officially what the Indian government says about this. But sometimes these are floated as trial balloons to push talks in the right direction.
Well, you know, it's interesting, Brendan, because we've been so focused on the possibility or no of a Trump-Xi meeting, as we should be, right? But there's the possibility that Trump and Modi will meet in just fewer than 6 days. The ASEAN summit starts in 4 days. What would that change in terms of the calculus for Xi if Trump and Modi were to have a successful meeting?
Yeah, exactly. All of these talks are used as leverage against, the other that are going on. So if it looks like the U.S. and India are heading in the right direction, does that pressure China to kind of meet Trump halfway in its negotiations? These are all sort of connected, not connected, but connected in some ways. The deal with Trump and Xi, we don't know if that meeting is going to take place. Trump said he's hopeful that it does, but you never know. So there's a big guessing game going on right now about whether that's going to come together. The two sides have been in a sort of escalatory mode lately, as opposed to a one that looks like they're close to a deal. But if the two leaders can get together and at least talk and at least extend the ceasefire, then they could look at that as a small victory. But they've got a long way to go before there's some comprehensive trade deal could be agreed upon that gets what China wants and what President Trump wants as well.
All right, Brendan, thank you so much. That is Brendan Murray there for us. Now to other top stories trending on the terminal this morning. Another multi-billion-dollar AI deal. According to sources, Anthropic and Google are in talks for cloud computing services valued in the high tens of billions of dollars. The deal would allow Anthropic to use Google's Tensor processing units. Both companies declined to comment. Russia launched multiple drone and missile strikes on Ukraine, killing at least 6 civilians, including 2 children. Dozens were injured. Ukrainian President Zelensky said 10 regions came under attack, including Kyiv and Odessa, and energy infrastructure was targeted. Hermes shares fell as much as 5% after its key leather goods division missed sales growth estimates. Double-digit growth, especially in the US, not enough to satisfy investors who have been expecting outperformance from the Birkin maker. Coming up, from the private credit outlook to AI investment in the financial sector, we'll speak to Manulife CFO Colin Simpson next. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. In this month's CFO Briefing, we're looking at life insurers, a great barometer of the health of the financial and capital markets. And I'm pleased to say we're joined by Colin Simpson, CFO of Manulife, alongside Nina Trentman, editor of the CFO Briefing newsletter. Colin, I have to start with all of the comments and market turbulence that they have engendered over recent weeks to do with auto loans, some private credit write-downs, of course, Jamie Dimon's comments. What have you been seeing over the last quarter in all of your businesses? Have you been looking more closely at your books?
Yeah, Vonnie, it's great to be here, and it's a really interesting question on private credit. Private credit has grown quite a lot. The important piece to note with private credit, it is often below investment grade and floating rate notes. And so that tends to be a little bit more volatile than public credit. And so it shouldn't be surprising that you get some headlines from time to time. Now, as it pertains to a life insurance business, we don't use much private credit to back our insurance liabilities. But actually, we bought a private credit business last quarter because our customers are demanding that type of asset. So, we're not concerned by the headlines that have come up. Does this mean, anything like the end of the private credit industry? Absolutely not. It's here for the long term, and we're glad to be involved in it for many cycles to come.
Colin, one of the growth areas in your business has been Asia, specifically in wealth and asset management. How do you see that developing from here?
Asia is so exciting for us, Nina. We're in 11 markets from an insurance perspective and 14 when you think about our asset management business. But what's so exciting with life insurance in Asia is the demographic powers that are behind it. We're selling products to people who haven't bought a financial services product before. And so that's really exciting. And so we get a level of growth that you just don't get in developed markets. And as a top 3 insurer in Asia, I think that sets us up really well for the next 10 years.
Just wondering about your business in Hong Kong. Of course, that's an important market for you as well. There's been some regulatory changes there with regards to mandatory pension plans. How will that impact your business?
Yes, so regulation and regulation change is just part and parcel of being a large financial services company. We saw some changes in the pension market in Hong Kong. We're the #1 provider of the mandatory pension fund. And actually, what we're seeing is going to provide, different value set for the customer. The administration is going to be done centrally. So that will impact our earnings. We announced it last quarter, $25 million a quarter will be the reduction in our earnings. But we're still very much committed to the market. We're #1 in the market, and we see strong growth in the Hong Kong pension market.
Just wondering, actually, in terms of your plans for the future as CFO, I know that you're targeting a return to equity ratio of 18% by 2027. How will you get there, and how close are you at this point?
Sure, Nina. We announced an 18% plus ROE target last year at our Investor Day, actually in Hong Kong, and we're well on the way towards achieving that. Now, in the last quarter, we had a little bit more excess mortality, i.e. a few more people died than we expected, and but when you normalize for that, our ROE is closer to 16.5%, so we're close to 18% at the same time as our growth. And Asia is going to contribute a lot of growth. We're growing our asset management business quite attractively, and we also have a buyback program. Last year we bought back 5% of our stock, and this year we're buying back 3% of our stock, and that does help the ROE position as we go into 2027.
You mentioned some data that were different perhaps than you were anticipating, Colin, and how that affected you. You're obviously a data-heavy business, models just, primed for AI, if you like. Draw the line for us between your AI investments and your bottom line.
You're so right, Vonnie. When you think of what can impact a life insurance company, we've got factors that are all over the world. We're a global company, and we're affected by markets everywhere. We're affected by demographic trends. We're affected by trends that are in the organization. So when you think of the power of AI and what that can actually do on a real-time basis, there's huge opportunity for us to use AI to make our business better. And that's, to price mortality better. It is to anticipate the markets, and it's also to do real-time reporting and real-time forecasting. So both as an organization and for me as the CFO, as in charge of a finance function, it's really exciting to think about how AI can augment what we do on a day-to-day basis as a life insurance company. So it's great.
Just to follow up actually on the something that you said earlier, you mentioned the acquisition of the private credit manager earlier this year. I'm wondering how you're thinking about deal making and your appetite for that for the year and years to come.
Yeah, so Nina, we're in a really fortunate position that we've got lots of capital on our balance sheet, and we maintain a really strong balance sheet. We've got debt capacity, so we can certainly afford to grow inorganically. But the great thing about Manulife is, with business in Asia and North America and an asset management presence in Europe, we don't see big gaps in our portfolio. So, inorganic expansion is something we will do on a needs basis. And so, what we did in private credit, we bought a private credit manager because we saw that level of expertise in the market that we don't necessarily have ourselves. And so it was a great opportunity to use a fairly modest amount of our capital. We spent just under $1 billion for 75% of Comvest. And so that was a good opportunity to buy expertise that we can add to our own and improve our returns. But as far as deal making goes, I think we've got so many more opportunities organically than inorganically.
Colin, you mentioned your wealth management business. What do you make of the market appreciation that we've seen, whether we can continue to see that, and your outlook for interest rates?
So funny, market outlook has become even harder than when I worked in capital markets. So, I don't have a strong view on where the markets go from here. What's really important for us at Manulife is we maintain diversification. So we're not overweight any particular theme or trend. Certainly public credit is something that we hold a lot of, and that's because it really suits our liabilities quite well. So in terms of spreads, they're really tight, and that reflects, just buoyant markets. But we're never complacent when it comes to the market outlook. Interest rates is an interesting one. Interest rates are really important to the life insurance sector. But we're more focused on the long end of the curve. So when and talking about the US here, we had an interest rate cut in September, and we're probably going to get another cut next week when the decision comes out. Actually, when the short end of the curve goes down and the long end stays up, the long end right now is about 4.5%. That's actually quite attractive for life insurance, because when people buy one of our products, they're buying a long-term savings vehicle, and then they'll compare that to what they earn in the bank. And if what they earn in the bank is going down because the short end of the curve is coming down, then our products will look more attractive. So it can be a good proposition for our customers if we see short end of the curve go down. But in reality, it's very hard to predict markets, so we don't take much interest rate risk at all.
All right, Colin, sounds wise to me. That is Colin Simpson, CFO of Manulife, and Bloomberg's Nina Trentman. Thank you both. And just a reminder, Bloomberg's CFO Briefing is a weekly newsletter for and about CFOs, featuring top executives at global companies and covering key trends in corporate finance. You can subscribe at NSUB Go on your terminal. Coming up, we'll bring you our exclusive conversation with KKR co-CEO Joseph Bay next. This is Bloomberg. The dollar has largely been range-bound, with one measure showing the quietest trading since 2013. Bloomberg's Haslinda Ammon spoke exclusively with KKR co-CEO Joseph Bay on how investors are navigating as the currency loses steam. Take a listen.
I don't think it's a question of global investors exiting the U.S. market by any means. I think it's more a question of diversifying their portfolios with that incremental dollar. Where do you want to invest it? I do think it's fair to say that most global investors have a lot of exposure to the US right now. And as the US dollar weakens and other markets like Asia continue to have these fundamental tailwinds in terms of growth, I think you're going to see people diversify their portfolios more and more to Asia over time. And that makes sense in a multipolar world, right? As regional economies are becoming more important, as Asia is getting more dependent on intra-Asia trade and growth, I think you're going to see more and more capital flow to Asia. It doesn't mean they're pulling out of the U.S., though.
But do you see that getting momentum then, Joe?
I think it really depends on who you are and what your portfolio looks like today. There are clearly some investors that probably have really very large exposures to the U.S., maybe a lot of tech exposure to the U.S., and are looking to diversify. There are lots of investors in the U.S. that have very small allocations to Asia today. And I think that's going to start shifting as well with the incremental dollar of investment. They want diversification. They want access to the growth that people are seeing in Asia. And I think you're going to see more and more capital flow to this part of the world.
KKR co-CEO Joe Bay speaking with Bloomberg's Haslinda Aman. Time now for your front page news. First up, on the New York Times, President Trump is demanding the Justice Department pay him about $230 million in compensation for the federal investigations into him. The Times cites people familiar with the matter. Any settlement might ultimately be approved by senior Justice Department officials who were once defense lawyers for the president. Next up, on the Washington Post, the White House expanding the demolition of the East Wing Tuesday, shocking preservationists. The National Trust for Historic Preservation, a nonprofit created by Congress, has sent a letter warning the planned 90,000 square foot ballroom will overwhelm the White House itself, which is about 55,000 square feet. The White House dismissed the criticism as manufactured outrage. And on the Financial Times, Sequoia Capital's COO has resigned over comments made by partner Sean Maguire, which she regarded as Islamophobic. The FT cites 3 people with knowledge of the matter, saying the COO, a practicing Muslim, stepped down in August after 5 years, precipitated by Maguire's social media posts. Those are your front page stories. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Trade maze. Trump equivocates on a China meeting, while India's Mint newspaper says the US and India are close to a trade deal. More compute. Anthropic and Google are said to be in discussions to team up on a cloud deal. Markets staying put. Futures flat after a metals sell-off and a mixed bag of earnings. More of those to come today, including the first of the Mag 7s, Tesla. So let's take a look at those markets now. We did have a flat day for the S&P 500 yesterday, and the Nasdaq 100 was down fractionally. As you can see, not really going anywhere today. It is the 4th busiest day of earnings this particular season, so watch out for a lot of single stock volatility. We did see precious metals drop yesterday, and that definitely fueled some of the equivocation, let's say, in markets. Spot gold down more than 5% on the session, and it's down again today. We're getting close to that 4,000 mark. That after 43 days of gains for gold. So definitely the momentum is ebbing. In terms of yields, we're not seeing much movement, but we are seeing just a couple of basis points here and there. So the 2-year yield, for example, is at 3.45. The 10-year yield is staying at 3.95. But the 30-year yield down again. It is at 4.5381 now. So watch that long end. Let's get to London now for some individual movers and stocks to watch. Here's Valerie Teitel. Valerie.
Hi, Bonnie. Let's start with earnings. Some disappointing news out from Netflix. Shares are down nearly 7% in pre-market trade. They said that they had a one-off charge. It was a $600 million charge they had to pay Brazilian regulators to settle a tax case. So what was a solid quarter for Netflix was overshadowed by this write-down, really dented their operating income. But executives were quick to say that they did have record subscriber engagement in the last quarter, and that is despite concerns from investors that AI-generated videos would be damaging the amount of time subscribers spent on Netflix. So Netflix in the red, down 7%. We also had earnings out from Texas Instruments. This is the key player in the analog chip space. Disappointing guidance, Vonnie, for a second quarter in a row. The shares are down nearly 9% so far in pre-market trade, really dragging the whole analog chip sector with it. Now, this really dents the hopes of a turnaround in this chip market. Texas Instruments citing weakness, especially in autos and in their China market. Lastly, more earnings, this time over in London. Barclays reporting a £500 million buyback and a raise to its guidance. The shares are up nearly 4.5%. And Vonnie, this is despite kind of a lackluster quarter when it came to trading revenue, really falling behind some of those Wall Street peers who reported 20% gains in equities tradings, for example. They also set aside more money for their motor finance provision, but this is mostly overlooked as investors focus squarely on the buyback and the guidance raise from Barclays. Bonnie?
Fascinating. Those shares continuing to creep higher in the session. Valerie, thank you so much. Valerie Teitel there. India-based Mint newspaper reporting that New Delhi and Washington may be nearing a trade deal that could cut tariffs on Indian exports from around 50% to as low as 15%. Let's bring in Bloomberg's Brendan Murray for more. The teams were obviously busy, Brendan. What kind of an agreement may they have come to, given this report?
Yeah, exactly. I mean, this deal has been months in the making, and it would be a significant step. The U.S. and India have tried to make a deal in various phases, 3 and 4 phases over the next 6 months or so. But it looks like that first phase might be coming together if we can believe this report. Now, there is a lot yet to confirm with the White House and with the official Indian government. But this would come at an interesting time because the president of the U.S. is trying to meet with China's president and do a deal of their own. So you've got a bit of gamesmanship going on, playing off India and China, obviously two competing manufacturing exporting powerhouses. So it'll be interesting to see what they say at the White House this morning. We've seen some of these reports before, though, so we have to sort of take it when we hear confirmation or not.
You know, more equivocation in the last 24 hours about that potential meeting between Trump and Xi, this on the part of Trump. But if he meets with Modi, is there more of an incentive to meet with Xi then?
Yeah, you know, it's all kind of interconnected, indirectly at least, that, you know, the president of both India and the U.S., you know, have a strategic rival, an economic rival in China. And so the U.S. is obviously trying to put some of these deals together to motivate leaders of other countries. So no matter how this plays out, we're not going to get some massive, comprehensive trade agreement with either India or China over the short term. But what we could get is an agreement to on the basic principles, and then an agreement to continue talking to iron out the details in the months ahead.
You know, Brendan, we keep asking if Trump will meet Xi or if he'll pull out of the meeting. You know, what's the danger that Xi himself decides that this is too idiotic and that he doesn't want to meet President Trump?
Yeah, exactly. I mean, you know, it was only a couple months ago when President Trump thought he had all the leverage and that, you know, he would have China running to the table. It seems the tables have turned, so to speak, and that President Trump is now the one sounding very conciliatory and sounding how they have such a good relationship and trying to sort of soften the tone to make this trade deal happen. But we haven't really heard anything from the Chinese side about whether they're willing to sit down just yet. They're going to want the U.S. to lower fentanyl tariffs, to ease up on some of its tech export controls, and to basically just tone down the rhetoric and not look at China as such a strategic enemy when it comes to things like high tech exports around the world, and more of a partner. And we're not hearing that at the moment from the White House.
No, we are not. Brendan, thank you so much. That is Brendan Murray, our trade czar. Well, let's take a look at oil prices, given what we're learning from India's Mint newspaper, because there is the potential that the trade deal that is being negotiated between the U.S. and India that could cut Russian flows to India, and that is putting a bid into crude oil. As you can see, both Brent and New York crude up 94 cents, more than 1.5% apiece. Still, though, New York crude very much subdued. It's just above $58 a barrel. Let's take a look at gold as well, because after that 5.3% drop yesterday, we now also have Evercore ISI's Julian Emanuel asking if a bubble just popped. They were asking the question, along with Alexander Altman of Barclays and others, if there wasn't just a little bubble forming in gold. So we'll see where we go from here. But as Paul Donovan of UBS said today, plenty of support for gold as well, including from central bank buying. We're also following shares of Google this morning. Bloomberg learning Anthropic is in discussions with the tech giant in a deal valued in the high tens of billions of dollars. Sources say the plan involves Google providing cloud computing services to the AI firm. Both companies have declined to comment, with talks still in early stages. Joining us now is Matthew Bloxham, Bloomberg Intelligence Senior Analyst. Matt, this is just more compute needs being met potentially. How does this deal differ from the others, if at all?
Yeah, hi, Bonnie. That's a good question. I guess we're waiting for the critical detail about whether this is a straight commercial exchange or whether it's a more complicated, slightly circular deal involving an exchange of equity, for example. I guess that the figures referenced there, tens of billions and high tens of billions of dollars, suggest that this is going to be more than a straight commercial deal. But I think it's good for both Google and for Anthropic. Clearly, for Anthropic, it potentially gives them access to the kind of scaling of compute power it needs to try to close the gap on OpenAI. And it's good for Google because they've obviously been investing for a number of years to grow their cloud business, which is number 3 after Amazon and Microsoft. And Amazon right now is the current main provider of cloud compute for Anthropic. And it's not just about cloud, it's about the compute, so that this deal would involve using Google's AI accelerator chips too. So I think, for both parties, could be a win-win. We just need to see those all-important details about how the deal is going to be structured.
Matt, are the so-called neo-clouds getting in on this action as well? We've seen a lot of big headlines from the big cloud service providers and so on. Not too many with the littler ones.
No, I think that their model's slightly different, but I think that they're all investing heavily in capacity to kind of move them forward. But as you say, to the extent that they're doing these kind of deals or expanding their compute capacity, taking a slightly different approach so far, but they're definitely going to be needing to scale their investments to kind of compete, even if it's just with the likes of Amazon Web Services and Google on straightforward cloud. But it could well be the next thing that comes to light.
Yeah. Who is left to need more compute, Matt, or is it a self-fulfilling thing that, the more compute you have, the more you will need eventually?
Yeah, I guess it's this kind of second tier of players like Anthropic, like Perplexity, that are really the ones that are kind of having to kind of work harder to close the gap on the big ones. Google, OpenAI, Meta, all incredibly well-funded platforms that are investing heavily in LLM. So it's that kind of second tier of player, and perhaps it's kind of Perplexity would be one player that we'll be looking at.
All right, Matt, thank you so much. Matt Bloxham of Bloomberg Intelligence. Now to other top stories trending on the terminal this morning. We're at day 22 of the US government shutdown, and it's now the second longest in history. With President Donald Trump expected to leave later this week for a trip to Asia, lawmakers and congressional aides say they see a real possibility this closure could extend into November. UK inflation unexpectedly held steady at 3.8% in September, driven by a drop in food prices. While data show inflation is still almost double the BOE's 2% target, figures are easing concerns over price pressures. Traders are now adding to bets on BOE rate cuts. Hermes shares fell as much as 5% after its key leather goods division missed sales growth estimates. Double-digit growth, especially in the US, not enough to satisfy investors who had already been expecting outperformance from the Birkin maker. Coming up, Netflix tumbling pre-market after reporting earnings. A closer look, plus more tech with Paul Meeks of Freedom Capital Markets next. This is Bloomberg. And we are anticipating some fallout today from Netflix earnings. We have Netflix's co-CEO Ted Sarandos on the earnings call yesterday. Have a listen to some of these comments.
We've been very clear in the past that we have no interest in owning legacy media networks, so there is no change there. But in general, we believe that we can be and we will be choosy. We have a great business. We're predominantly focused on growing organically, investing aggressively and responsibly into the growth, and returning excess cash flow to shareholders through our share repurchase.
So that was after reports that Netflix could be eyeing Warner Brothers Studios as a potential purchase. But also there was this tax dispute with Brazil into third quarter earnings, and it cut them by a substantial amount. So let's get to Paul Meeks now, head of technology research at Freedom Capital Markets. So it was a mixed bag, right, Paul? I mean, this one-time charge because of a tax dispute with Brazil, was that offset by the idea that at least it's not going to be bidding for a studio?
I think that's a very good point. Now, first of all, I think the tax issue in Brazil is a one-off. And the reason that I know this is they pinpointed the dollar amount. And if we did not have that tax charge, they would have beaten the operating margin that they had guided to by a significant amount. And the guidance that they gave for the next quarter shows a turnaround. And if there are any lingering effects, they will be immaterial to earnings. But I thought that the big news, and I think it is very positive, is that they will not chase at least the legacy assets of Warner Brothers Discovery. Maybe they enter into some sort of deal for some of the assets, but I was worried as a shareholder that they may try to buy the whole enchilada, and I think that would have been very dilutive to their earnings and a bad move. So actually, with the stock indicated down pre-market, this might bring a better buying opportunity, in my view, for Netflix.
Yeah, I mean, it's been stuck in this 1150 to 1250 range for quite some time, Paul. Why are investors punishing the stock so much today? Sure, a one-time charge, but, you know, companies do have those from time to time.
I actually think it's lingering concern about Warner Brothers Discovery. I think that there's always some skepticism from Wall Street analysts and other investors about, are you telling us the truth about all of the impacts of said one-time charge? And, you know, the stock had actually, as you just mentioned, been range-bound ever since about July, August. And so there has been some consolidation in this name for some time, even before last night's results and guide. And so I think there's probably still some anxiety over Netflix.
So we do start the Mag 7 today already again, Paul. We get Tesla later on, and it's been a storied few weeks for Tesla. What are you anticipating out of the call in particular?
So I think Tesla could post grisly earnings on the EV side. Now, they're typically not that much of a surprise because we do get during the quarter some mileposts as far as deliveries and production forecast. But I think that Musk might take the opportunity tonight to really lower the bar for the EV business for 2026. And it could be significantly bad. But of course, as he always does, he will try to pivot the conversation and pivot investors to how great 2026 will be for particularly the autonomous vehicle fleet and also robots. But he's been promising that for many years. And I think in autonomous vehicles with Alphabet and Amazon also in the game, and they're very aggressive companies with very deep pockets, I don't think it'll be easy sledding for Tesla in autonomous vehicles. I don't think they will dominate like they did in EVs.
Yeah, I mean, it's many, many milestones that he has to reach if he wants to earn his pay package. But this stock doesn't seem to be going anywhere, Paul. Does it come down to earth at some point, or is this, you know, a true valuation for Tesla's potential?
Well, the potential is all about autonomous vehicles. If that does not come to fruition within a reasonable time frame, the EV business itself is probably only worth 1/4 to 1/3 of the stock's current price. So you never sell Elon Musk short, but there could be some hell to pay. And the autonomous vehicle ramp is oh so important for them because I think the EV business is in quite a bit of trouble.
As for the rest of the Mag 7, we're not there yet, but obviously this market is looking towards them for, you know, a next leg up, a next catalyst, if you will. Will any of them surprise us and get rewarded?
You know, I think there's a couple of companies within the Mag 7 that won't necessarily surprise us with their earnings and guide, but the stocks are so relatively inexpensive that they could take a pop. And I'm specifically talking about Amazon and Alphabet, particularly Alphabet after yesterday's decline. I think it could be poised, even if the guide and the results are status quo, for a nice, essentially relative valuation rebound versus the rest of Mag 7.
Wouldn't it be a good time, though, potentially, you know, given that there are all these fears of a sell-off, to perhaps wait before getting into some of these names, even if they do surprise to the upside in their earnings?
That's right. No one knows what is going to be said on these calls with specificity unless you have inside information. And if you have inside information, you're going to the big house. So I would tell you that in almost all cases, I wait for the news before I either initiate a position or add to a position. Because you could have a company that beats on revenue and EPS for the quarter, beats on revenue and EPS for the guide, and the stock still goes down next day because someone is disappointed about something said on the quarterly webinar. So very rarely do I go ahead of earnings because I'm waiting just like everybody else for the data download.
All right, Paul, thank you so much. That is Paul Meeks there of Freedom Capital Markets. I don't want to go to the big house. I want to stay in the small house. Coming up, more earnings and a treasury auction. We'll get you prepped for your day ahead. This is Bloomberg.
We had an exposure to Tricolor. I'm obviously not happy about it. Barclays had no exposure to First Brands, although we were approached multiple times by them. The thing about fraud is you wonder whether it is one bad actor or it is some aspect of circumstances that are stretching the company's finances and making them take risks that they otherwise should or would not do. That's the kind of thing we look for, and that's what I think investors should be looking for over the next, months and quarters.
Barclays CEO C.S. Venkatakrishnan speaking to Bloomberg. Their shares of Barclays gaining in London trading following earnings. Now, a look at what's ahead today in the US. We're going to be getting results from the likes of Hilton and AT&T before the bell. Then we have a $13 billion auction of 20-year treasuries. That's at 1 p.m. Eastern. And then more earnings after the market closed. Tesla, one to watch. IBM and Southwest Airlines will also give us an idea of consumer demand. Texas Instruments extending post-earnings decline here as the outlook disappointed. Apparently, customers are taking a wait-and-see approach, so that's sort of casting a pall over the chip sector in the pre-market. Now, Alphabet A shares up 1.5%. As we know, Google in talks with Anthropic on a potential multi-billion-dollar cloud deal. We're in the early stages. We don't know anything of the contours of that deal, but that's enough to send those shares higher. And Beyond Meat, it's just beyond me. It's set to extend gains now for a third day. Look, this would be like a more than 600% rally. It got added to a meme ETF and so on and is expanding its distribution at Walmart stores. But that was the news already before this huge market pop. We're seeing, and be careful, $1.2 billion worth of turnover in the stock in the pre-market. That's 10 times what you see with Tesla. Let's take a look at the macro picture because S&P futures are trying to find a bit of a direction. They are fractionally higher after the index was flat yesterday. Weaker sterling today after that inflation data, talking about traders changing their bets on rate cuts there. So we have the dollar stronger, the 10-year yield at 3.95. And let's take a look at gold and oil because we're seeing a little bit in oil on the potential for India to do a U.S. trade deal. And gold down another 1.5% after that 5.3% drop yesterday. That's it for Bloomberg Brief. This is Bloomberg.